Today is Monday, September 16th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the financials this morning, Alan. Big week for the Fed. What will the FOMC do at the conclusion of Wednesday's policy meeting? And what do you think Fed Chair Powell likely will say in his press conference?
Okay, so in light of evidence of a weakening U.S. economy, the Federal Reserve is widely anticipated to reduce interest rates for the first time since March of 2020. So at the conclusion of Wednesday's meeting, it looks like there will probably now be a 50 basis point reduction. In fact, the probability, as far as what financial futures markets are indicating, is that there is a 61% chance of a 50 basis point cut and the remainder 39% probability of a 25 basis point reduction. So also there will probably be additional interest rate cuts from the Fed at following meetings this year. That would be at the November meeting and also at the December meeting. And I think Fed Chair Powell will strongly hint at more accommodation, probably suggesting that there will be rate cuts into next year. In fact, I'm thinking that the Fed, with a pivot this week to accommodation, will start a policy of lower rates that I think will continue well into probably through next year. So look for a lot of accommodation coming our way from the Fed and a lot of accommodative rhetoric from Fed Chair Powell.
Yeah, Alan, not to put you on the spot, but do you think the Fed has a target interest rate level?
They really, the target on long-term inflation is 2%. As far as how low they think rates will go, somewhere in the 3.5% area. They're really not quite vocal as to where they would like it to go, but some analysts are thinking 3, 3.25, 3.5, somewhere in that area.
Alan, one more question for you. Gold is making record highs. Why, and what is the outlook from here?
Okay, so today we did see gold futures advancing to a new record high above $26.17 per ounce. Much of the strength linked to prospects of the Fed aggressively pivoting to accommodation. But it is more than just the interest rate influence, since there are concerns about the increasing national debt, which now is over $35 trillion. Also, we have central banks, very aggressive buyers in recent years, and that trend has continued. Also, technically, there is a rule of thumb that anytime any market makes a new record high, that there quite often is follow-through strength. And I think that will be the case as well for gold futures. So from a technical point of view, higher prices are likely, and also from a fundamental point of view, I would expect continued gains.
Thanks, Alan. Mark Bowman, last week, the U.S. Climate Prediction Center gave a 71% chance for La Nina to arrive this fall. What impact might that have on the soft commodities?
Okay, so yeah, this CPC is looking for La Nina to emerge in September through November and last through January through March. So there are tendencies, well, it looks like it could be on the mild side at this point, which would mitigate some of its effects. But let's start with through these commodities, start with cocoa. La Nina usually has a tendency to bring cooler temperatures to West Africa when it is present in the winter months. And this could slow development for the mid-crop in cocoa. Now, last year, the tail end of La Nina last summer may have contributed to an unusually cooling wet pattern that caused serious problems with pod rot and swollen shoot disease. So that's something we got to kind of look for and be wary of. Ecuador and Peru in South America could also see some cool and dry conditions, and that could possibly affect their crops in those countries. Ecuador is is expected to move up to being the number 2 producer this year. And Peru's got a small, much smaller producer, but they are becoming more important. Over in coffee, La Nina could bring wet conditions for Indonesia this winter and cool temperatures for key Arabica growing regions in Minas Gerais, Brazil. Brazil needs an end to its drought more than it needs the cool temperatures, though. And it does not really show up to be a result of La Nina. Only the northern part of that country gets more rain. And then in cotton, La Nina could bring warm and dry conditions to southern U.S. And the dry conditions could maybe slow some rebuilding of moisture in West Texas. In sugar, La Nina has a tendency to bring cooler temperatures to southern Brazil, as I stated, but not necessarily wet conditions. The less extreme heat could reduce evaporation, but they need rain.
Mark, you mentioned cotton. Last week's hurricane hit some cotton growing areas. What are the implications there?
Well, so heavy rainfall at this time of year could cause problems because you have open bolls, and that could cause discoloration, and they call also stringing if the rainfall is really extreme. If it dries out, it gives a chance for the cotton color to bleach out again. Now, last week's crop progress report showed Mississippi had 69% bolls open, and they received the brunt of the storm. So that could be, we could see some damage to their crop maybe in this afternoon's crop progress report. Also, eastern Arkansas received some heavy rains, and Arkansas had 83% open. So those are two states to look for today. Last week's crop progress report showed also that overall U.S. conditions were 40% good to excellent, which was the lowest so far this year. And they were down from 44% the previous week. So we could see some slipping in that.
We'll have to look for that. Turning toward the grain markets, Mark Soderberg, we had some USDA reports last week. Any surprises that stand out?
Well, I think the biggest surprise is the fact that there really were no major surprises. Corn production came out at 15.186 billion bushels. It was slightly above expectations, however, well within the range of estimates. Stocks for old crop fell 55 million bushels to 1.812 billion. That was slightly below expectations, but new crop stocks are expected to rise to 2.057 billion. That was slightly above pre-report estimates. Looking back since 1990, there have been 10 years where the USDA raised production in both the month of August and in September. 5 of those years, final production was above the September estimate, and 5 times it was below the September estimate. So a little bit of a coin flip where we wind up from here, but I do think I have a little bit of a tilt towards lower production, given the fact that we've had a very hot, dry close to the summer growing season. On the soybean side, production was cut ever so slightly, 3 million bushels to 4.586 billion versus expectations for just a slight increase. Old crop ending stocks slipped a little bit, 340 million bushels. That was in line with expectations. New crop stocks are expected to rise to 550 million. Well, that's the highest in 6 years. It was actually slightly below pre-report estimates. So here too, looking back since 1990, we've only seen 4 years where production went up in the month of up in the month of August and then go down in September. In 3 of those years, production was below the September estimate at the end, and in 1 year it was higher. So here too, I think history suggests a little bit lower production on the beans, and when it's all said and done. So looking forward, I have a little bit of a lower bias here, and that should keep prices well supported, particularly given the fact that west central areas of Brazil are very dry, as they're probably going to be off to a little bit slower than usual start in getting their crops planted.
And Mark, any other factors you'll be watching this week that may impact grain prices?
Later today, we'll get a NOPA crush report for the month of August that will provide some information on domestic usage as we wind down the 23-24 marketing year. NOPA members are expected to have crushed about 4% less in August than in July, however, still be a record high for the month. We have weekly crop progress and conditions this afternoon, but I think more importantly will be harvest data as harvest begins to creep north from the southern Midwest. And a lot of focus started to shift back towards the Black Sea region as well. Last week, a Russian missile struck a Ukrainian vessel filled with wheat destined for Egypt, and that was followed by a stark warning from the Kremlin that if Western-made weapons strike deep within Russian boundaries, they may retaliate with nuclear weapons. So prices surged late last week. We did see a little bit of a pullback so far this week as tensions seem to have eased a touch, but certainly volatility appears to be on the rise.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.